What does that tell you going into earnings season next week? Coming up, DC grappling with a fresh wave of COVID cases.
COVID is not over, and we have an obligation to protect our country, the American people, and make sure we're taking steps to prepare.
That conversation up next.
We know BA2 is here. We know that it is more transmissible. We know that it is leading to increased cases, and we know we're already seeing an impact on our resources. COVID is not over, and we have an obligation to protect our country, the American people, and make sure we're taking steps to prepare.
Speaker Pelosi testing positive after spending time with President Biden. The White House statement reading as follows, quote, "The president is not considered a close contact of Speaker Pelosi as defined by the CDC. The president saw Speaker Pelosi at White House events and had brief interactions over the course of the last 2 days." Anne-Marie joins us down in DC. Anne-Marie, can you help us understand this? I mean, we've seen the pictures. She spent time with the president. There was a kiss on the cheek and not a close contact. What is the CDC guidance? And the reason I ask this, and I think it's important, we're all going through this again. Corporations around the country are getting cases after cases after cases. They're all spiking. We all know someone that's got COVID again. How are we meant to manage this?
Well, it's a good question, Jonathan, because now everyone is vaccinated, boosted. The White House saying the president is double boosted. He got a second booster last week. So they view this as a very different scenario than, say, where we were last year and the prior year, obviously. But Speaker Pelosi was at the White House twice this week. We saw the kiss on the cheek. They embraced. What the White House is saying, though, is because he didn't spend a cumulative 15 minutes within 6 feet of the speaker over 24 hours. Now, I think there are some who would view the CDC guidelines a little bit differently, but the White House says it is technically not a close contact. But obviously, this is something that is concerning because it's not just Speaker Pelosi either, Jonathan. It's really ripping through Washington, D.C. right now. A number of lawmakers and also cabinet members are infected.
Looking at the situation with Speaker Pelosi, the other issue as well, Anne-Marie, is that she did have a scheduled trip, a congressional mission over to Asia, and there was a lot of reporting about perhaps going to Taiwan. The foreign minister of China had this to say, and let's just say they didn't hold back. If the Speaker of the U.S. House of Representatives knowingly commits a sneaky visit to Taiwan, it will be a malicious provocation to China's sovereignty, gross interference in its internal affairs, and an extremely dangerous political signal to the outside world. What's happening here?
Well, this is based off foreign news reports, right? We do know that she had this trip planned to Asia, and obviously now that the Speaker Pelosi does have COVID, that trip is going to be canceled or potentially postponed. So she was leading this congressional delegation abroad, and what the foreign news reports were that she was going to Taiwan. Now, her office was not able to confirm that with us. So it's interesting that the Chinese Foreign Ministry used the word sneaky trip, but China would view this, as the foreign minister said, as a provocation, because this would be an individual that's in line also to the presidency, very close to the president, Speaker of the House, same party as the sitting president, making a trip to Taiwan, which China views as the U.S. going against the One China policy.
I'm going to get to Mike McKee and bring him into the conversation as well. Anne-Marie, thank you so much for that. Mike, let's talk about how some of these stories start to link together. COVID cases, China, the situation in Shanghai, what this all means for the growth outlook and how hard that's been hit, Mike, in the last few weeks.
It's been hit pretty hard. We're looking at surveys from the Bloomberg Survey of Economists show inflation rising even more significantly by the end of the year, and that's just pushing people to push the Fed to do more, which then has a spillover impact on the rest of the world, and a lot of this coming from still COVID and the supply chain problems coming out of China.
Mike, the other issue we need to talk about is this Friday. Going into the weekend, on Sunday, we've got another election. It's round one of the French election. Can you help me understand just exactly what's going on here?
Well, let's set the table here. Monsieur le Président is in trouble. Macron is only 3.5 percentage points ahead of his chief rival, Marine Le Pen. There are a lot of candidates, as you can tell, but those two are considered all but sure bets to make it to a runoff rematch of the last election. And their polls show Macron only has a 5.5 percentage point lead. So there is growing fear that he might lose. He entered the race late. He spent a lot of time mediating between Russia and Ukraine, and it turns out the voters did not care. Actually, what the voters are saying, as they say in the United States and everywhere, c'est l'économie stupide. It's the economy, stupid. Inflation in France at the highest since the Eurozone was formed. Le Pen touring towns and villages saying that Macron is out of touch. He's not the president of everyone. He's the president of the rich, and she's defending the little ones. She's pledging to slash gasoline prices and tax big energy companies. This is not going over well in markets. The CAC 40 struggling. The spread between French oats and German Bunds has widened significantly. So we will see what happens on Sunday. The concern is Le Pen, of course, she's a far-right nativist, would put at risk the economic reforms that Macron has tried to put in place and splinter European unity over a whole lot of issues, especially Ukraine.
Mike McKee, thank you, buddy. As always, do you want to do that again for us? Just one more time.
L'économie.
That was beautiful.
Yeah.
That's going to work. We should put that in the promo for Sunday's
L'économie
coverage.
stupide.
Looking forward to Sunday's coverage with Francine Lacroix. She'll take you through that later on this weekend. Looking forward to this weekend too. The Masters, Man City, Liverpool, the Australian Grand Prix. Mike McKee, there's a lot of sport coming up. I'm excited about it. Let's get you some sector price action. Here's Abby.
Hey, John. Well, I do know a little bit of French, but I certainly cannot compete with Mike McKee on that. Maybe next Friday, sectors in French. But right now, we do have more sectors higher, interestingly, with the S&P 500 down by about 0.5%. Energy leading the way, up with oil up just a little bit. Financials finally getting a boost with yields higher. To the downside, though, that is where the big weakness is in those mega weight tech sectors, communication services, discretionary tech. They are weighing, and therefore you have the S&P 500 down on the day and down on the week. And this is an interesting one, John, and it's not going to be surprising to you based on your conversations all week. But the worst four sectors, or among the worst four sectors for the S&P 500, communication services, despite Twitter's big rally, discretionary and tech, but you have the banks right in there. So it's an interesting mix for sure.
Picking up today, at least, the financials up 0.4. And Abby, thank you for that. Looking ahead to next week with bank earnings season just around the corner. Looking ahead to the European elections, the French election to be precise, and what that means for the euro, given what's happening with the dollar this morning. Looking forward to Guy Johnson's coverage. That will kick off in about 7 minutes' time on Bloomberg TV. Up next, we'll bring you the trading diary, looking ahead to the road into the weekend and coming out the other side into next week with 3 big events on the horizon. This is Bloomberg. "26 minutes into the session. This equity market's trading lower by 0.5% on the S&P. On the Nasdaq, down by 1.4, with yields kicking higher in a big way once again. And looking ahead to a big week ahead. That's the price action. Here's your trading diary. Some data at the top of the hour. Wholesale inventories. Then looking to next week. Fed speak. Bostic, Bowman, Waller, Evans, all on Monday. CPI Tuesday. JP Morgan earnings on Wednesday. Wells Fargo and Morgan Stanley on Thursday, followed by an ECB rate decision and initial jobless claims as well. From New York City, thank you for choosing Bloomberg TV. This was the countdown to the open. I'll be off next week. If I catch you later on Bloomberg Real Yield, looking forward to it. Otherwise, enjoy your weekend. From New York, this is Bloomberg.
from the financial centers of the world. This is Bloomberg Markets with Alex Steele and Guy Johnson.
It's 30 minutes into the U.S. trading day on Friday, April 8th. Here are the top market stories we are following for you at this hour. Leaders on the move. Olaf Scholz and Boris Johnson meet in London, both set to speak in moments. Ursula von der Leyen and Volodymyr Zelensky meet in Kyiv after Ukrainian officials say dozens were killed in a strike on a rail evacuation hub. Russia's rate shock. The central bank delivers a surprise 300 basis point interest rate cut, its biggest in nearly 2 decades, offering relief to the recession-bound economy. And getting real, inflation-adjusted yields are way less negative, and the 10-year is north of 270. The dollar's at its strongest since July of 2020, but the focus next week shifts back to stocks when earnings season kicks off. From New York, I'm Kaylee Lyons with Guy Johnson in London. Alex Steele is off today. Welcome to Bloomberg Markets. Guy, it's Friday.
Hallelujah. The week has felt like it's lasted for quite a while.
Yeah.
It does seem as if hours are days and days are months right now. Let's talk a bit about that earnings season that you were bringing up there, because I think, Kaylee, this is really interesting. We are going to be transitioning next week from what is largely thus far this year been a very macro environment.
Yep.
We're going to get a little bit more granular. We're going to get a little bit more bottom up. And I think we need to think about what companies are going to be telling us and how they're going to be telling us. So the earnings season kicking off with the big banks, JP Morgan, obviously front and center. Those are the names that we're going to get next week. JP Morgan is going to start things off, but we are going to learn a lot next week. The U.S. economy is different to the banking sector, but the banking sector is fairly representative of what is happening here, so we'll get a good idea of what is going on. And clearly, Kaylee, there are a number of headwinds that are weighing on sentiment. You've got the rising interest rate story, you've got the rising inflation story, you've got the war in Ukraine. And that manifests itself in so many different ways. So the question of the day is a fairly straightforward one. Will earnings disappoint? Well, let's ask that question to Romain Bostick, co-host of Bloomberg Markets, The Close, and Katie Greifeld, co-host of ETF IQ. Romain, let me start with you.
Yeah.
What I'm really surprised about here is that despite all the macro headwinds, once you start looking at earnings, estimates are going up, not down. Why?
Estimates are going up primarily because of what we saw, honestly, in the last 2 quarters. Remember, there was a lot of pessimism going into those quarters, and what we saw was margins held up, revenue growth held up. There were a few outliers, a few exceptions there, but we saw what was effectively an economy that stayed healthy. We saw companies that managed to take some of the weaknesses that were in the economy and actually exploit them to their advantage, and I think that's why you're still seeing a lot more bullishness out of some of the analysts, despite the fact that you're hearing, I guess, a little bit more pessimism by some of the CEOs and some of the CFOs, but I think maybe that can be discounted as maybe them kind of talking things down a little bit, trying to tamp down expectations as just sort of a fail-safe.
Okay, so Katie, maybe we're taking a little bit of confidence from the backward-looking fourth quarter. The first quarter also is backward-looking. I mean, is it ultimately really the guidance that's going to matter here?
Absolutely. I mean, that's the case for every earnings season, but especially this one when you're dealing with all the factors that Romain just mentioned, you know, war in Ukraine, inflation at multi-decade highs. It's really going to depend on what the CEOs and the C-suite actually says. It's going to be fascinating to hear from the banks in particular next week, since those CEOs, they have a unique view on what's actually happening with the consumer and with the economy.
Katie, let's talk about how we should think about these earnings in the context of inflation. We need to obviously factor the inflation story into the top line and the bottom line. We need to deal with this in nominal and real terms. When you adjust for inflation, do you think these earnings are going to look quite so good?
It's a great question. How do you actually look at the real inflation-adjusted earnings? And I mean, if you think about what inflation means to earnings, you have both the input costs and the labor costs that companies have to factor in. And then there's the, other side of it where are they able to actually pass those costs on? And it was really interesting to watch last earnings season. You still had margins at record highs. I mean, a lot of companies have been able to pass these costs on, at least at the index level. That's what it's showing. And the companies that were able able to were really rewarded in the stock market. If you think of Chipotle, for example, comes to mind, they raised prices and they got rewarded big time.
All right, Romaine, well, let's keep talking about inflation adjustments.
Yeah,
inflation adjusted yield,
right,
the 10-year real yield, negative 18 basis points right now. How much does the fundamental story actually matter for some of these companies if you have real yields that are becoming increasingly less negative?
Well, it certainly matters, particularly with some of the more high valuation companies. But when you talk about inflation and sort of inflation adjusted earnings here, you have to keep in mind there is still a significant disconnect between what we look at on an aggregate basis when it comes to the S&P 500. Not only you're talking about 5% plus growth expectations for earning EPS for the quarter that just was, but when you look forward to estimates for the second quarter, the third quarter, and the fourth quarter, it's actually accelerating higher here. So all the gloom and doom that we talk about with regards to the potential for a recession or even an economic tamp down, the good chunk of the companies that make up the bulk of the S&P 500 are in a position where they can sort of weather that storm. They do have pricing power, and more importantly, they still have businesses that are seeing pretty healthy revenue growth. On top of that, I should just point out too, you have not seen at all in the economic data anything that would suggest a significant drop-off in consumer spending, in business spending, or more importantly, in the labor market.
Consumer spending is, though, front and center, and Katie was just mentioning the visibility we're going to get from the banking sector next week. What kind of visibility are we going to get from the retail sector? It tends to come a little later on in the reporting season, Romaine, but nevertheless, what I hear is that big retailers are starting to see inventory builds.
Yeah.
And I'm just wondering what data we should be looking at in these earnings to get a real idea of what is happening here. Are we looking in the middle of the P&L? Are we looking at the inventory data just to get an idea of really kind of where they are and what the consumer is willing to purchase and not?
Yeah, I didn't hear the last part of your question there, Guy. I think I lost a little bit of audio. But in general, when you talk about what we look at for those inventory levels, it was actually, we saw that build up, and to some people looked at that build up as a positive thing, the idea that companies were able to sort of navigate some of those supply chain issues. I think going forward, people want to see a little bit more right sizing of those inventory levels. But more importantly, I think what they really want to see is whether the price increases that a lot of these companies have already passed on and that they've communicated that they're going to continue to try to pass on to the consumer, whether the consumer not has the willingness, but more importantly, has the capacity to keep eating that. I think at some of at the retail level, particularly with some of sort of the mid-price retailers, I think you're going to see maybe a little bit more concern there. And of course, we heard from some of the high-end retailers, including the CEO of RH, who talked about how some of these high net worth customers were starting to be a little bit spooked by the macroeconomic conditions globally. That doesn't mean they don't have the capacity to spend, but it certainly has maybe dented their sentiment.
All right, Katie, so as Guy alluded to, retail is at the far end of earnings season. What's going to kick off next week, as you mentioned, is the big banks. And today, you are seeing the KBW Bank Index trying to snap a losing streak, but it's been down 7 days in a row. What is going on with the financials?
It is amazing how much investors seem to dislike bank stocks right now, because you would think, interest rates are rising, sure, the yield curve is flattening, but you do have a steepening yield curve in the past few days that should be good for the banks, but especially if you look at XLF, it is the biggest bank ETF out there. It's seen its worst week of outflows since June 2020, just some incredible size and scopes there. And I think it all comes back to the fact that we're talking about a recession. I mean, what would happen to the fundamentals of credit in a recession? But we did hear from Chris Harvey from Wells Fargo yesterday saying that, I don't know, this looks like an opportunity. The guidance probably won't be that bad next week.
Well, can I comment on that? Because, Katie, the setup going into this bank earnings season is probably one of the worst that we've seen with regards to the stock's performance, and yet the fundamentals, the economic fundamentals, don't really suggest that we're going to see a drop-off in lending or see a slowdown in lending. I mean, there are probably some concerns there with regards to maybe some of the investment banking business, but we know that trading has been good for a lot of these banks. The economic backdrop is still relatively strong, and I think most of the bank CEOs, at least the ones that we've heard from publicly, including Jane Fraser and Jamie Dimon, they seem to have suggested that, I guess, some of the upside that we've seen in the previous quarters, that's going to continue.
That's what's a little frustrating about covering banks on air and in print, is that the stocks, the trading has been amazing, to your point, but the stocks, they just seem to follow the yield curve more than anything else. But to the point that trading has been amazing, those comps are tough.
So does that mean the yield curve is broken? Is that what you're saying?
I'm not going to say that. That's a bold statement.
Okay. Well, it's the most imperfect, perfect indicator.
All right, we'll have to table that discussion for a later time. I love a lively debate on a Friday, Guy. Love to see it. Romaine Bostick of Bloomberg, as well as Katie Greifeld.
one out.
Thank you both very much for joining us. Now coming up, we'll get the take from our next guest who says, look at lower volatility stocks if you want protection against a recession. We'll talk with the co-chief investment officer of Envestnet, Dana D'Auria. This is Bloomberg.
The war in Ukraine rages on.
President Putin's invasion is brutal.
Turn to Bloomberg for up-to-the-minute reporting from around the world and analysis of what it all means to you.
The intention here is to increase the pressure on the sanctions front.
I think the United States policy is that the sanctions continue until President Putin is no longer there.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
Earnings season is just around the corner, so let's turn back to our question of the day. Will earnings disappoint? Joining us now is Dana D'Auria, co-CIO at Envestnet. Dana, what do you think?
Hi, thanks for having me. So look, we are definitely moving into a period of greater volatility. I think companies that have been able to pass on costs, inflationary costs, or absorb them with greater productivity, we're going to now start to see maybe some margin pressure. So I wouldn't say that I necessarily expect a bad earnings season, but I do think that the market has to be prepared for more volatility, hits on growth that are coming from these very high energy prices, more supply shocks now, et cetera.
Dana, the idea has been that equities are an inflation hedge. Will this earnings season prove or disprove that idea?
Equities are an inflation hedge over the long term, right? It's not that they're so well correlated in the short run. So we could have a very disappointing earnings season and you'd still say, well, if I'm invested for 5-10 years, I'm still going to stick with equities because equities can pass on these higher costs to consumers. I would say to you that small caps in particular, small value, have been able to pass on costs over time and beat inflation in decade after decade. So that's one place to look. But yes, there's still an inflation hedge if you're looking for the long term. If you're looking for short term, you're unfortunately in an area like TIPS if you want true unexpected inflation hedging.
Well, and of course, those real yields are going ever higher. We're only negative by about 17 basis points or so right now. Dana, how problematic is that?
So, and I'm sorry, which part of it? I didn't catch the beginning part of your question.
You're seeing real yields that are increasingly
real
less
yields.
negative.
Yes.
We're only 17 basis points away right now from positive territory, and I'm wondering if and when we get to positive territory, how problematic that is for the equity market as a whole.
Yeah, no, real yields have been a problem for a significant period of time. I think, look, we have a period now where equities and fixed income are struggling in this market. And we're going to be, for the foreseeable future, looking at not only volatility in the equity markets, but also potentially lackluster returns in fixed income. So I do think it's a problem for the market. I think the market has a lot to contend with in terms of, obviously, geopolitical crisis. Midterm election is generally a more difficult period of time, right? After the midterms, markets tend to pick up. So I think if you can kind of stick with it, there's an upside at the other side of this.
What are we going to learn about the consumer this earnings season, do you think, Dana? Obviously, a lot of people are starting to feel quite stressed about what they see at the grocery store and at the gas station. Is that going to be reflected here, do you think?
Yeah, I think it's been interesting with consumers because they seem to have been continuing to show up in spite of the fact that we keep reading consumer confidence is down. Inflation is the #1 concern for everyone, right? Far surpassing, obviously, employment, which is, we have a very tight employment market. So it's hard to say if we're going to actually see a drop off at this point in purchases. Now, one thing that works against and suggests maybe we could is that that cushion that everybody developed, that liquidity cushion and savings is really starting to diminish. During COVID, because of all the COVID checks, American households had a lot of money on hand. That's starting to diminish significantly.
Well, and if that potentially is going to ultimately start to weigh on demand, have we already seen the limits of companies' pricing power? Is this the peak?
Oh, no. I mean, look, I think actually the good news about what happened during COVID is that we saw great productivity increases and margins were pretty robust. I do think that companies will be continuing to pass on these costs, that we're going to see more of it. It's going to hurt both margins as well as continuing. I mean, what we've seen in inflation is that it's actually very broad, right? We're very focused on food and energy, but inflation at this point is pretty broad across the different sectors that are looked at. So I don't think that we have.
Dana, companies are going to have to pay more for input costs. They're going to have to pay more for labor. The middle of the P&L is going to be stressed. Margins are going to come under pressure. Where does that leave buybacks? How much spare capacity is there going to be from the U.S. corporates to continue to buy back their own stock? That's been a huge driver over the last few years in terms of the stock improvements that we've been seeing.
Yeah, it's a great question. I was just looking at a company, I won't name names, but that is now rethinking a planned buyback, because of labor costs and other issues. So, I do think we could see an impact on buybacks for sure. Interestingly, I think, dividend payers is probably a place where clients and investors might want to look as well. I mean, we've gone into this stage where dividends don't matter as much. Now we focus on buybacks in a lot of cases on how to return money to investors. But, as we move into a phase where we're returning to fundamentals, higher interest rates, I think the impact of having just a lower duration in your stocks, right? So instead of being very heavy in growthy stocks where the terminal value is where a lot of the value is, and you have to kind of wait for that growth to appear, I think dividend payers is a place where people are more going to look because it is lower duration in terms of getting some payback, and you're not as stuck with the vagaries of whether the buyback actually happens.
Final question, Dana, since the banks are on deck next week, how do you feel about the financials going into this earnings season, considering they've been pretty beaten down?
It's odd, right? Because we're in this rising interest rate environment. We have a very hawkish Fed telling us that the interest rates will keep rising. I think what we're seeing with the banks is recession signs are kind of hurting them. So we're seeing this rotation to defensives, away from banks, away from risk on, semis and into places like utilities. And even though the curve would suggest that banks have a way to make out on this, I think because of concerns about recession, you're going to continue to see that defensive rotation.
It's interesting. The housing market continuing obviously to be very strong here and now, yet the house builders are starting to be priced lower on the expectation, as you say, maybe of this coming recession. Dana, it's been great to catch up. Have a great weekend. Really appreciate you joining us this Friday. Dana Dioria of Envestnet. Thank you very much indeed. What are we going to do next? The leaders of the United Kingdom and Germany meeting today in London to discuss the war in Ukraine and the response to it. The live shot has just come up at 10 Downing Street. We are anticipating a press conference at some point. Boris and Olaf speaking soon. This is Bloomberg.
We are awaiting German Chancellor Olaf Scholz and UK Prime Minister Boris Johnson. They're set to speak from 10 Downing Street any minute now. They've been meeting for the past hour. Let's talk about what these two leaders likely talked about. Joining us now, Chad Thomas of Bloomberg, who leads our Western European government coverage. Chad, how contentious do you think this meeting was, given the UK has made significantly further moves in regard to Russian energy than Germany has proved willing to at this point?
Well, it is their first meeting in London with Scholz as Chancellor. It's his first trip there as Chancellor. And you can bet that they have had some pretty lively discussions around sanctions. Germany is under pressure not just from the UK, but from other allies as well to move further. Of course, overnight, we did learn that they gave way on sanctions on coal. That was something that they had been also holding back on. Now, the real question is up next is oil. We hear that there will be some discussions around oil at the EU level as soon as next week. Gas has been off of the agenda to this point, officially speaking, but there is definitely pressure on Germany to keep moving. They are the ones who ultimately will have to go along if they're going to do this at the EU level.
How much pressure are they under, and why are we not seeing more movement from the Germans, Chad? There's a headline just crossing the Bloomberg from the Ukrainian Prime Minister. The team visited Bucha. They did so with von der Leyen and they did so with Borrell. Both are in Ukraine today. The sense, certainly in many parts of in Europe at the moment, is that the situation on the ground is incredibly grim. How damaging is this to Germany's reputation, that it is becoming the anchor that really is slowing everything down right now in Europe in terms of its response? How damaged is Germany's reputation as a result of this, do you think?
Well, I think Chancellor Scholz, of course, who only came into office a couple of months ago, he's really had to walk a fine line here. As you well know, Guy, they have they have moved on a lot of things that they said they wouldn't do when it comes to sending munitions to Ukraine, when it comes to a lot of other sanctions, things like SWIFT. And so they have been slowly moving, but they have been frustrating a lot of their allies in making those movements, allies wanting them to move more quickly. There's a lot of pressure, in particular from Eastern European countries, countries on the border with Ukraine, and also from Ukraine itself. But again, Olaf Scholz is also under pressure internally from many businesses really to not, for example, to shut off the gas because of what it would mean to industry if all of a sudden 40% of the supply were to disappear overnight. So he's really trying to walk a fine line here, but sometimes really struggling to get that across, I think, to allies.
Okay, so being pushed by allies, being pushed by business, what about the average German voter? Where do they stand on this domestically?
It is starting to tip in Germany in the direction of putting, stopping imports of gas and other energy from Russia. They, of course, it's all over the German media as well, the same images that we see elsewhere of the atrocities in Ukraine. And so the public opinion is shifting in that direction. And so I think that's why we'll eventually see Germany shifting in that direction as well, because you'll have the willingness from the public to take the pain that would come with doing that.
Chad, Paul Krugman wrote a piece in the New York Times a little bit earlier on, incredibly damaging, I think, for Germany, some of the comments that he made. But he made the point really quite forcefully on in one area, and that is that Germany forced many parts of Europe during the Eurozone crisis to take considerable economic pain. Yet it's not willing to do the same thing when it comes to potentially being its turn.
And that is one of the arguments that you hear people from around the European Union and elsewhere making. Of course, Germany would argue in this case they're not asking for any help as such from other countries. This is a decision that they're making based upon whether they would continue, of course, to import this energy or not. In the case of the Eurozone crisis, they were being asked to help. But you're absolutely right that it's something that they're getting heavily criticized for.
Chad, we're going to leave it there. Great stuff. Thank you very much indeed. Chad Thomas joining us ahead of the Scholz-Johnson press conference, which we're expecting to start very shortly. You can see the live shot coming from 10 Downing Street. We'll bring you that as soon as it happens. This is Bloomberg.
We're an hour into the U.S. trading session. Bloomberg's Abigail Doolittle is tracking the moves. Abigail, it's Friday. Maybe not the best end of the week it's looking like for this equity market.
Yeah, not a lot of Friday feeling here for these stock indexes. The S&P 500 down about 0.3% off of its lows, but nonetheless a loss. And the pre-market stocks had been higher. And the Nasdaq 100 down about 0.9% off of its greater than 1% loss lows. But nonetheless, the Kaylee's point, stocks not having a great Friday. In fact, on the week, not a great week. Now, a big piece of it, yields rising. That 10-year yield up 4 basis points. Kaylee was just taking a look at a chart here on the side of set that just shows straight up. The same thing with the dollar. Here's a chart that I can see over here, up 9% over the last year. Absolutely incredible, to the point the Bloomberg Dollar Index at its highest level going all the way back to July of 2020. Really helped out by yields. As for the world of ETFs, not so great there either, because again, stocks down on the week. So these are the biggest outflows for ETFs on the week. SPY at $10 billion, then the QQQs, tech of course, XLF, banks, $3 billion in outflows, LQD, corporate bonds, and then the VCSH, that's the Vanguard short-term corporate bond fund, also losing about $1 billion in funds. It's very puzzling around banks down so much. Of course, I think the last time I looked, banks higher today, but they had been down 7 days in a row. And in fact, relative to outflows for banks, this is so amazing. Down all 5 days in a row here for bank ETFs. And that is the most on record, Guy. And why that is so incredible, this chart doesn't show this, but if you think back to the days of the financial crisis, the fact that this week, that the last few days, that there have been 5 days of record outflows relative to the selling of 2008, 2009, it's really pretty incredible. What are investors seeing, especially given that yields are higher? Maybe the next segment will show a chart showing the banks relative to the yield curve. Maybe that has something to do with it.
Absolutely. It's amazing. Next week, I think we're going to be able to separate out the yield curve effect and the earnings story. And I think that's going to be a really interesting exercise for these markets. Abigail, thank you very much indeed. Big week next week for earnings. We continue to focus in the here and now, though, as to what is happening in Ukraine and the politics around it. We are awaiting a news conference that will be delivered in a few minutes' time. The German Chancellor, Olaf Scholz, in London to visit Prime Minister Johnson. We will be talking about that when we get the press conference live for you. We will bring it to you. In the meantime, Andrew Lowson is a fellow for the Center for Strategic and International Studies in Europe, Russia, and the Eurasia program. Andrew, let's talk a little bit about Olaf Scholz and Germany. If we can just start there for a moment. Paul Krugman wrote a piece in the New York Times a little bit earlier on, basically accusing Germany of being Putin's enabler. Is that fair?
Well, I think the German relationship with Russia for a very long time has been one that's dependent on energy purchases. Of course, Germany is the largest consumer of Russian gas in Europe and is continuing to pay Russia for its energy supplies, as we're seeing these terrible scenes coming out of Bucha, coming out of other places in Ukraine. So as long as Germany and certainly the rest of Europe, but certainly Germany, keeps up that energy relationship with Russia, it is continuing to fund the war effort. And so I do think that is a fair criticism.
Okay, but even if Germany were to act, even if they were to say, okay, we are going to stop importing Russian gas at X date, how much does that actually make a material difference in the conflict in the near term?
This is the big challenge. It'll take Germany a long time to shift away from Russian gas supplies. There is certainly a dependency on Russia to power German industries. It's not going to be able to happen overnight. And so the effect of this, a German decision to move away from hydrocarbon imports from Russia is something that, the effect we'll see will take time. So unfortunately, I think even if Germany is able to make the difficult decisions to readjust its energy markets accordingly, then that's really not going to have a major effect on Russia in its battlefield capabilities immediately. But certainly it will have a very potent effect on the political scene.
Does it have a potent effect on Vladimir Putin, though? Even if Germany were to take that action, we continue to see an incremental ratcheting up of sanctions, and yet the conflict goes on. Are sanctions even really accomplishing anything at this point?
I think this, the sanctions that we're seeing are ratcheting up slowly at this point. If it were to transition into oil and gas, despite all of the complications involved in that, I think that would have an effect on Vladimir Putin. That means that the Russian export economy is going to enter into a completely new era in which Russia's capabilities to raise funds from exporting energy abroad is no longer an option. That will dramatically undermine Russia's war effort. It will really limit Russia's foreign policy options.
Andrew, let's talk about what's happening in terms of the military story. The West, including Germany, now willing to provide more heavy weapons to push back an expected offensive in the east from Russia. Many of those weapons will be Soviet-era weapons, but increasingly NATO is arming Ukraine with NATO weapons. Is this increasingly a proxy war? Is this now a proxy war? And what implications, if it is, does that have for the long term?
Well, I think it's the images of atrocities that are committed in Ukraine, allegedly by Russian forces, is making it quite hard for the rest of the West to stand by and provide Ukraine with second-tier outdated weapons. This is starting to turn into a conflict where there is increasing involvement from the West to provide modern weaponry. I would say, yes, I think that's a fair assessment that things are starting to move into the proxy war territory. But I think that comes back to the fact that this is a war about the future of Europe. It's about whether Russia can simply run roughshod over a neighboring country. Yeah. And we're seeing the effects of that in real human terms.
Well, let's talk about the risk to the rest of Europe. The line from day one has been that Vladimir Putin's ambitions do not end with Ukraine. At this point, how large would you say the risk is to other Eastern European Baltic countries?
Well, I wouldn't count out the Russian military. Of course, it's not proven to be particularly effective in the way that it approached this war, but this is an invasion that it launched with really faulty assumptions. Russia still has a lot of tools in its arsenal, and frankly, as Russia is bogged down in Ukraine, it increases the risk that Russia may rely on unconventional weapons to counter other threats that it perceives from other parts of Europe. So it does kind of edge us into territory where Russia is still posing a threat to Eastern Europe, to Central Europe. But the fact is it's posing a threat that might not just be tanks and artillery, but potentially the use of chemical weapons, cyber attacks, and other unconventional means of warfare.
Andrew, if Marine Le Pen occupied the Élysée Palace, how different do you think would France's strategy be, would Europe's strategy be to this war?
I think we might see a fundamental shift. So of course, Macron has been quite involved in trying to return France to a leadership position in Europe, to help to broker a negotiated solution, to find some ways to achieve a diplomatic end to this war. I think Marine Le Pen is quite involved and rather sympathetic to the way that Putin runs his country, and I think there might be an erosion in that united front if we see a more right-wing government in France.
Andrew, you just said the phrase a diplomatic end to this war. Do you still believe that's possible?
I think at this rate, what we're seeing in the peace talks in Turkey are not, I would agree that they're not serious. The fact is Russia is still in a position where it believes it can achieve war aims, it believes it can wrest a part of Ukraine from the control of Kiev, and to present it as a victory. It's not willing to compromise on some of its aims, even as apparently there's no longer the desire to remove Zelensky from office. But Russia still believes that it can accomplish something, and I don't think it's going to negotiate that away at the negotiating table.
Boris Johnson just walking out with the German Chancellor Olaf Scholz. Let's go to 10 Downing Street and listen in.
Pleasure, Olaf, to welcome you to Downing Street. The friendship between our two countries, between Britain and Germany, has become even more vital since Putin launched his barbaric onslaught against Ukraine, bringing war into our continent. I know that Britain and Germany share exactly the same sense of horror and revulsion at the brutality being unleashed, including the unconscionable bombing of refugees fleeing their homes this morning. The attack at the train station in eastern Ukraine shows the depths to which Putin's once vaunted army has sunk, at least 39 people killed and dozens wounded on a train platform crowded with women and children. It is a war crime indiscriminately to attack civilians, and Russia's crimes in Ukraine will not go unnoticed or unpunished. Germany and the UK also share exactly the same conviction that Putin must fail in Ukraine, which is why we're working together in the G7 to toughen our sanctions and target every pillar of the Russian economy in order to cut off funds from his war machine. The UK and the EU have announced new sanctions this week, and just today we in the UK have imposed new asset freezes and travel bans. We will also agree on the importance of weaning ourselves off dependence on Russian oil and gas and ensuring that our energy security cannot be threatened by a rogue state. This is not easy for any of us, and I applaud the seismic decisions taken by Olaf's government to move Germany away from Russian hydrocarbons. Today we have agreed to maximise the potential of the North Sea and collaborate on energy security and on renewables, where Germany and the UK lead the way in new technology. We cannot transform our respective energy systems overnight, but we also know that Putin's war will not end overnight. That's why Britain and Germany have joined dozens of allies to supply Ukraine with defensive weapons. Last week, the UK convened a donor conference which raised weapons and equipment for Ukraine worth over £1.5 billion, or 2.5 million items of military kit. Today, I can announce that the UK will send a further £100 million worth of high-grade military equipment to Ukraine's armed forces, including more Starstreak anti-aircraft missiles, which fly at 3 times the speed of sound, another 800 anti-tank missiles, and precision munitions capable of lingering in the sky until directed to their target. We will also send more helmets, night vision, and body armour on top of the 200,000 pieces of non-lethal military equipment the UK has already dispatched. But Olaf and I agree that our two countries and our allies must go further and provide more help to Ukraine. The Europe we knew just 6 weeks ago no longer exists. Putin's invasion strikes at the very foundations of the security of our continent. But his ambition to divide us has demonstrably failed. On the contrary, he has succeeded in uniting Europe and the whole transatlantic alliance in support of Ukraine and in strong solidarity with each other. Putin has steeled our resolve, sharpened our focus, and he has forced Europe to begin to rearm together to guarantee our shared security. Britain and Germany will work together to ensure that our armed forces are fit for the future, including with our joint effort to manufacture state-of-the-art Boxer armoured vehicles. We will hold a joint cabinet meeting between our two governments within the next year. Our defence ministers will meet before the NATO summit in June, and I look forward to joining you, Olaf, at Schloss Elmau for the next G7 summit. We face the new reality created by Putin's invasion. I know that Britain and Germany will meet this challenge together as passionate advocates of democracy and freedom and both committed friends of Ukraine. Thank you. Over to you, Ola. Thank you.
Ladies and gentlemen, dear Boris, thank you for having me in 10 Downing Street. We both have met quite often the last days and weeks, and we have phoned much more. The last time we met was in Brussels in NATO and G7, and I'm very happy that we now have the chance to discuss together here. Es ist gut und wichtig, sich in der aktuellen Lage und dieser Zeit auszutauschen. Und ich freue mich ganz besonders, dass wir unseren Austausch heute hier in London persönlich durchführen können und eben nicht so, wie eben schon gesagt, in den vielen Telefon- und Videoschalten, die wir immer haben, in den Kreis der G7, in den verschiedenen anderen Treffen, die wir miteinander durchführen. Und das ist ein guter Fortschritt. Großbritannien und Deutschland sind lange Partner, Verbündete und Freunde, und wir werden es bleiben, auch wenn unsere Freunde vor einiger Zeit entschieden haben, nicht mehr in dem...
Of course, that is the voice of German Chancellor Olaf Scholz speaking alongside UK Prime Minister Boris Johnson after the two held about an hour-long meeting at Downing Street in the city of London. Of course, we heard from Boris Johnson that about the attacks on the train station in Ukraine earlier today, that attacking civilians is a war crime, and he says that the UK and Germany agree on the importance of weaning ourselves off of Russian oil and gas, and that continues to be the question, Guy, for Germany in particular.
Absolutely a difficult decision for Germany to make, but increasingly it looks like that is the direction that we are heading in. As we were hearing earlier on from Chad Thomas, Germany has resisted almost at every turn, but ultimately has taken the step forward with the rest of Europe when it comes to providing weaponry, when it comes to sanctioning the financial system of Russia via the SWIFT system, and ultimately starting down the road of sanctioning energy via the coal sanctions that are now being applied. But it is a much more difficult decision, as you say, Kayleigh, when it comes to oil and gas in particular. But as we've been hearing, the story in Ukraine is getting tougher and tougher by the day. The pressure on Germany is growing as well.
Absolutely, and the situation is tough here on Earth, and it is to some extent affecting space as well, considering the U.S.-UK, EU-Russia partnership on the International Space Station. And speaking of that, SpaceX will be launching a rocket to take private individuals to that International Space Station at a time when those relations between the two countries are tense in space. So what is it like? Bloomberg's Ed Ludlow sat down with NASA chief Bill Nelson.
So I caught up with Kathy Leaders on Thursday. She's very busy, you're very busy, the range is very busy. Something like Axiom, has it been hard to fit it in alongside all the other launches and projects that NASA has going on?
Well, I love it. When we have a traffic jam, this is great.
Is that how you describe it, a traffic jam?
Oh, yeah. I mean, the range can only take so much, although that efficiency will increase.
Right.
And we are going to see one a day, sometimes 2 launches a day in the future.
4 private citizens, 1 American, 1 Canadian, 1 Israeli, 1 Spanish. They're going to the International Space Station. There are 3 Russian cosmonauts currently aboard ISS. Will they have dinner together at 250 miles above the Earth?
Of course. 3 Russians, 3 Americans, and 1 German astronaut on the permanent crew that's up there. Yes, this is an ISS. What does that stand for? International Space Station.
But you know what I'm saying, that tensions here on Earth between the US and Russia are high.
And look, at the level, easy as you go, professional relationship between the cosmonauts and the astronauts.
And you expect that to be the case, even with the Axiom crew in particular I'm talking about?
Even with the terrible things that Vladimir Putin is putting on the Ukrainian people, I expect the professional relationship between astronauts and cosmonauts to continue for the sake of our civilian space program in both countries, as well as the history that, remember, back in the midst of the Cold War of the Soviet Union, we had Apollo-Soyuz, and that broke the ice.
I have to ask you, your counterpart, Dmitry Rogozin, he's been pretty hardline on the situation in terms of space, saying sanctions, economic trade could lead to Russia pulling out of ISS. Do you see that happening?
Frankly, no, because I believe that the Russian government is committed to the civilian space program, just like the Soviet government was back as far back as 1975.
I want to ask you this. It's not necessarily linked to the conflict in Ukraine. It's linked to SpaceX. But do you see an outcome where NASA uses Soyuz this year, next year, the year after? Do you need to if you have SpaceX?
We hope to, because we have cosmonauts in Houston training to fly on the space shuttle. We're going to send an astronaut to fly as we have on Soyuz. Look, Mark Vande Hei just came back after a year in space on the Soyuz. It wasn't difficult at all. This is the professional relationship that is going on between the cosmonauts and the astronauts.
That was NASA Administrator Bill Nelson speaking to Bloomberg's Ed Ludlow. Interesting conversation. Ed joins us now from the Kennedy Space Center. Ed, he was trying to put a really positive spin there on the Russian relationship with NASA. How sustainable really is that?
Yeah, it's a really interesting one. You and I were discussing kind of the economic side of this. On Thursday, you know, NASA puts $4 billion a year into the International Space Station, both for upkeep, maintenance and upgrades. Russia puts significantly less than that, but it's still a meaningful amount. So if Russia pulls out of ISS, NASA is left basically carrying weight on the budget side of things. But here's the more worrying extreme scenario. The module on the ISS, which reorients it, puts it to the correct altitude